Hi, and welcome back again to Tim Biggin's Options and Volatility Newsletter. We'll be taking a look today, as we have lately, at why IV matters, why implied volatility is the most important part many times in option trading. We'll be taking a look at a setup for a Microsoft put calendar where the technicals, fundamentals, and implied volatility all lined up for a probabilistic pullback on Microsoft. So let's jump in and take a look, shall we? First of all, from a technical standpoint, here's the chart on Microsoft. You can see finally showing a little bit of weakness after getting extremely overbought. 9-day RSI getting to well over 80. Got back up there again, but finally starting to soften once again. We're seeing Bollinger percent B hit over 100, starting to soften again. MACD, interestingly enough, really not giving any sort of buy signal here, really seeing just this kind of very, very low volatility kind of mini melt up, right? MACD certainly not confirming that, so the technicals diverging in a big way. More importantly, IV at the lowest level we basically have seen all year, finally starting to show a little bit of strength. And that's kind of our cornerstone. We don't jump in front of the trend. Wait for it to start to show some reversion. Here, implied volatility starting to pick up a little bit. 9-day RSI getting to overbought but starting to weaken. Bollinger percent B, same thing here. We can see more importantly, if we shorten up the chart here, key reversal day on Friday in Microsoft after it traded up to a fresh new all-time high on the opening, right? It actually reversed course, weakened, and closed on the lows of the day. So this sort of key reversal pattern is many times emblematic that the trend is coming to an end. You can see it's been above the 20-day moving average ever since basically the tariff tirade post-Liberation Day started to give back. We saw this huge rally. Earnings came out. Earnings were good. Not great, right? But we saw this huge gap, right? Stock has been basically up since then. Hasn't been below the 20-day moving average for an extended period of time, which normally Microsoft, as you can see in the past, tends to chop back and forth between it. You can see there's major kind of downside support now at that 450 level, which was kind of overhead resistance several times here, right? 3 occasions over the past year, 1, 2, 3, right, where it basically traded right up to there and then pulled back. Even the time where it was previously at the high, right, only up above that for a short period of time. So certainly the technicals, right, pointing to a pullback here. All of the technical indicators starting to get weakened after a big overbought condition. MACD not confirming, and that key reversal day on Friday kind of gives us the go-ahead as well. We also, as we said, like to look at IV, and we can see here implied volatility is absolutely dirt cheap, pulled off the IV from Friday's close, only at the 10% level, which means option prices haven't been this cheap over the past year, except 10% of the time. And that was just briefly, right? Which was back here where we take a look at the IV and Microsoft. So absolutely trundling at the lowest levels over the past year. I pulled off 30-day IV, but certainly this is indicative of all of the IV measures. And then historic volatility at 0%. Microsoft hasn't been this quiet ever over the past year. That kind of highlights that MACD just bleeding out straight sideways, right? No absolute buy signal confirmation there. You can see this melt up rally, if you will, mini melt up has been just so well behaved. Seems like it's just up a little bit every day. Starting to finally get a little pushback. Friday's key reversal, certainly an indication of that as well. And then you can see as far as implied volatility here, now finally starting to strengthen, looking at the money IV, right? A basic kind of, plain vanilla look at it. Had been well over 20 about a month ago, now under 18, had briefly traded under 17, right? But starting to finally strengthen here. And you can see that here's a look at implied volatility just on a chart basis, right? Certainly bouncing off those lows, the lowest levels of the year. Microsoft, the biggest market cap stock in the S&P 500 and in the NASDAQ, both just edging out NVIDIA. Apple now a distant third, so Microsoft, the biggest of the big, yet valuations for Microsoft approaching extremes here on a price to sales basis, getting back towards that 14 times level, which has been problematic in the past for the stock moving higher, right? Only been up there 2 times, and this in its history, right? And both times were preceding a big pullback. If we jump over to the price chart, you can see the last time price to sales got over 14 marked that previous high in Microsoft, which was right before this big pullback here. So certainly on a price to sales basis, getting richly valued, no doubt, right? You can see here over the past decade, right? The max was at 1477. That was back here, right? The current well over 13, right? Certainly rich compared to the median of under 10. We can see on a price to earnings basis, right? Starting to get a little bit pricey as well, no doubt. Trading at almost 37x, right? Never quite hit 40x over the past 5 years, right? But certainly getting to the richest valuation we have seen. And right here at this level, which marked a big sell-off in the stock as well. So on a price to earnings basis, getting to be very, very expensive on a valuation viewpoint. Price to free cash flow, by far the highest level basically ever in Microsoft. This is for a $3 trillion plus market cap stock, right? We're looking at it well over 50 times price to free cash flow. You can see over the past decade, the only time it was there was basically on Thursday's close because the stock closed down on Friday, right? But intraday Friday, it actually exceeded this 52 times. So here it is on a 5-year basis, the highest price to cash flow multiple we have seen. Here it is on a 20-year basis. You can see not even close. So Microsoft certainly getting very expensive on the valuation metrics, no doubt. And on a comparative basis, Microsoft, as we just saw, is the biggest market cap stock in both the S&P and the NASDAQ 100. So took a look year to date, right, on Microsoft's performance versus the S&P 500, right, and the NASDAQ 100, right? And you can see up until just recently a fairly high correlation back and forth. Brief period where Microsoft was basically trading under the S&P 500 and the QQQs or NASDAQ 100. But for the most part, highly correlated. Makes sense, right? Microsoft back here, I believe, was the second biggest market cap stock compared to Apple. Now the biggest, so you'd expect a high correlation, right? It has a very big weighting in both the S&P 500 and the NASDAQ. Yet, we've seen this rip higher, right, over the past couple months, where Microsoft has absolutely outperformed both the S&P 500 and the NASDAQ by over 10%. So that would lead, I think, to a reversion in Microsoft to these two indices, right? And this, outperformance is even greater considering that it has such a large weighting in each one of those ETFs, right? So I expect Microsoft to certainly start to revert back to the mean and be a relative underperformer to both the NASI and the SPOOs over the coming months, right? The trees don't grow to the sky forever, and certainly this is the case of that. So Microsoft getting well extended versus the indices that it's the two biggest components of, right? Both the S&P, SPY, and the NASDAQ 100 QQQ. So that led us to our put calendar spread trade, right, to capture this sort of reversion that we expect, positioning for a pullback, doing it in sort of a hedge manner, right? We're not jumping out and simply buying puts, but we're taking advantage of the fact that we can defray some of that time premium decay don't have to be spot on in timing. So here's a couple of trades going out, buying the August 450 puts, selling the July 450 puts. These are traditional monthlies, and paying about 465 for that, setting up about 10 deltas net short, actually paying a little bit of IV, right? Buying a slightly over 25 IV, selling slightly under a 23 IV, right? And you think normally, hey, why would you want to do that? Here's why. If you take a look at the comparatives on an IV basis, this is going back the past year, using basically the puts we bought, which are about 5% out of the money. Microsoft around 480. This is the 450 level. So the longer term 60-day ones, those August puts are in green here. The shorter term ones we sold, the Julys are in blue, and you can see that most of the time the shorter term tend to trade slightly higher, maybe IV, but those instances where the longer term 60-day, the Augies in this case, traded a premium to the shorter term Julys, the 30-day ones, almost always is a signal that things are getting a little too complacent because they're in essence selling down those short-term options in a big way. We're seeing that happen once again today. And if we take a look at these four instances on the chart, here's the first one, right? Here's the second one. Here's the third one, and here's the fourth one, right? So that equates to times when things got a little too complacent, right? IV got too cheap, right? And it preceded a decent pullback in Microsoft stock, and that's really all we need here to benefit from our trade structure. And a move back towards this 450 level, that's why that 450 strike was chosen. So we're really just looking for the stock to have a slight pullback to where it was less than a month ago would be ideal here, and that term structure vol flipping from a slight positive to a negative many times, as we said, does indicate the fact that things are getting a little too extreme, right? You can see anytime you get these lows in short-term vol, right, usually an ideal time to say, you know what, they're hammering short-term vol too much, things too complacent in Microsoft, let's play for a pullback, and we're seeing that again today. So we'd expect, right, this to converge as well as Microsoft stock heading lower. So hopefully provide some insight how we go about using the technicals, the fundamentals, and most importantly, implied volatility to structure trades that have a probabilistic edge. Will this trade work out? Who knows, right? But we put the probabilities in our favor, and at the end of the day, trading is all about probabilities, not certainty.